everyone, and welcome to another Morning Markets here at True Potential. Well, last week was a shortened week, mainly due to the Jubilee holiday here in the UK and the Memorial Day holiday in the US, but there was plenty of data released in between which will help us understand market movements, but also the divergence between economies in the West and East. And it's worth reviewing some of that data that was released now. So over last week, equity indices in China rose around 2 percentage points, whilst we were mainly flat in the UK, whilst US markets were down around 1 percentage point. And the reason for this can be explained by the divergence between the growth and interest rate outlook in China and the rest of the world. So if we deal with China first, China is still dealing with the ramifications of its latest COVID lockdown, as well as a deep recession in the housing market, which began last year. Now, one of the necessary medicines for the economy there is lower interest rates and guidance from the central bank about the easing of credit conditions there, as well as some stimulus from the government. And this is in order to try and reflate the economy and boost economic activity in line with the government's targets. But perhaps where this is most important for global markets is through global commodity prices. As China invests more and renews its activity, it's likely to increase demand for industrial metals and for global oil prices. Now, in contrast, in the US in particular, the central bank there, the US Federal Reserve, is trying to cool growth. Recall that jobs data there is remarkably strong. The unemployment rate is back to where it was pre-COVID, but month-on-month job creation is double the rate at which we were at in early 2020. So the challenge for the Federal Reserve is somehow to cool the US economy, slow job growth without causing any remaining economic damage. And one of the challenges they face was highlighted last week in that measures of current activity in the US in both the services and manufacturing industry were again remarkably strong, showing the breadth and depth of the economic recovery in already very tight jobs markets. And bringing this all together, the main challenge for both the US Federal Reserve and indeed for the Bank of England is rising commodity prices. And the renewed activity in China is likely to feed into inflation pressures globally and pose more of a challenge for economies here and in the US. How do central banks raise interest rates in order to cool growth, slow inflation without causing damage to the jobs market? And the economic data that was published shows that they might have to raise interest rates more than is currently expected. And that's mainly the reason why US equities are struggling to rise despite strong economic data there. Equity indices are unusually focused on interest rate markets and just how much the central bank will have to raise interest rates. And indeed, this Friday, we will get more inflation data from the US. And that's where we'll get an idea on whether inflation has indeed peaked and just how much the fall is. So please do stay with us through the week as colleagues will update you on data released in between and refresh the outlook for inflation towards the end of the week. Thank you.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.